On an annual basis, we bring in over 4 million tons of iron ore.
For the past year, most of the concern has been about oil. But this Hamilton steel manufacturer says the economic slump has hit them just as hard.
It's been a tremendous blow to the industry at large, both the steel industry and the mining industry. So the price of steel has dropped over 40% in the course of 1 year.
Much like oil, there is a global glut in steel, driving prices to lows they haven't seen since 2003. The Canadian economy as a whole is heavily dependent on resources, much more than the U.S. So when those prices slump, the economy goes with it. The U.S. Fed rate hike is expected to push the already low dollar even lower. Today, the Prime Minister acknowledged that can be a double-edged sword.
There will be opportunities for our exporters to benefit from it. But obviously, we are always looking at the challenges that a lower dollar will pose to Canadian producers and to the Canadian economy in general.
That isn't the only challenge. Just yesterday, Bank of Canada Governor Stephen POLOZ said the economic recovery in the U.S. isn't being mirrored here.
Usually you think of the Canadian economy following the U.S. economy fairly closely. This will be one of those places where it really doesn't.
While this has been a rough year, before the oil crash, Canada's economy had been performing well. Another double-edged sword. Consumers were spending, but piling on record debt, buying expensive houses, all driving the economy.
As we recovered in 2010, 2011, the U.S. is finally seeing a recovery from the 2008, 2009 recession. It's been a very, very slow wait to see the U.S. consumer really finally kick back in with some strength.
So for now, this remains a tale of two different economies. One, the U.S., confident and growing. The other here, lagging behind and hoping to catch up after suffering recent setbacks. Peter?
Well, Renee, what should Canadians be watching for in light of today's U.S. rate hike?
Well, first, the Canadian dollar. Already low, it will likely fall even more as investors flock to the U.S. dollar over the loonie. And next, interest rates. The Bank of Canada is in no mood to raise rates here, so its short-term rates likely won't move, but longer-term rates, like some mortgages, could go up because they are tied to the rising rates of the bond market. Now, the biggest impact, though, could be on our GDP, and that one's simple. If the U.S. economy keeps growing, that economy will hopefully bring ours up with it. Peter?
All right, Renee, thank you.